Boy, you hate to say like this time feels different, but sure does feel different.
Do you buy Saylor's line of we're not going to get these 75% corrections?
This cycle's ICO, these Bitcoin treasury companies, eventually something's going to blow up.
My question is there enough demand to soak up any blow-ups that happen?
Michael Saylor just made one of his boldest claims yet. He says we may be witnessing the end of the 4-year cycle entirely. No more bull runs, no more bear markets, just one long march upward from here. It's going up forever, Laura. Let's take a listen to what he had to say on Bloomberg right here.
How do you expect the asset to continue a price increase at these levels that we've seen? I mean, can it keep that up over the next 5 years, over the next 10 years? And at what point do we see, winter coming again? Because that's been a permanent fixture of this asset class, right? It's gone from 0 or 1,000 to 20, and then back down to 3 or 4, and then up to 50, and then back down to 15, and now up to 110. Like, when does it drop again?
Winter's not coming back. We're past that. We're past that phase. If Bitcoin's not going to 0, it's going to $1 million. And you have all the evidence you need to determine that, right? The President of the United States has determined he supports Bitcoin. The cabinet supports Bitcoin. Scott Bessent supports Bitcoin. Paul Atkins has shown himself to be an enthusiastic believer of Bitcoin and digital assets. Ken Tez at CFTC feels the same way. The banks are going to custody Bitcoin. Bitcoin has gotten through its riskiest period. The accounting has been corrected. There's now only 450 Bitcoin a day available for sale by natural sellers. That's the miners. At this level, that works out to about $50 million of Bitcoin available for sale every day. If that $50 million is bought, then the price has got to move up to find any seller that's price sensitive. Now, if you do the math, you'll actually see the Bitcoin treasury companies by themselves are buying the entire natural supply. Yeah. BlackRock and the ETFs are buying another measure of that. And we've got nation-state actors coming into the space. So I think when Bitcoin rallies, if it surges to 500,000 or $1 million, then maybe we could talk about it crashing down by $200,000 a coin. But at the current price levels, it only takes $50 million to turn the entire drive shaft of the crypto economy one turn. And you've got the Trump Media Organization announcing $2.5 billion. You've got GameStop announcing $500 million. You've got my company that's raising billions and billions of dollars. So the writing is on the wall. Bitcoin's moving higher.
So with that, it may sound pretty bold, the idea of no longer having bear markets, but we are going to show something right after the jump when we get our guests in here that does show pretty clearly that this cycle is seemingly quite different from anything that's come before it. And it does give a picture of where we could potentially be headed.
Let me break this down for my fellow Bitcoiners. In just 8 weeks, I've seen a serious shift. More strength, more energy, and fast muscle gains. The reason? FitScript. They ran 124 biomarkers, blood, hormones, inflammation, and built a fully custom plan, nutrition, training, supplements. No guesswork, no templates. This is functional medicine meets precision fitness for high-performing men who want sovereignty over their health. If you care about optimization the way you care about your money, test, don't guess. Don't trust, verify. Hit the link in the description or scan the QR code on the screen to check out FitScript and see what's possible.
The thing I was alluding to is taking a look at kind of the difference of the past cycles here and kind of these blow off like retail FOMO tops that we've seen the past, 2017, 2021, and before that 2013. And it looks very, very different, and it feels very, very different this time around, just in terms of it has felt painful because it's just been this slow, steady grind. And I guess my general question to you is, do you buy Saylor's line of we're past that? We're not going to get these distinctive cycles and these massive, like our kind of par for the course 75% corrections. Is it more of this 45-degree angle in the coming years? So I'm curious to hear your thoughts.
I mean, I think the halving naturally starts mattering less and less the more halvings that take place, right? Like that's natural. It's having a increasingly diminishing effect on the total new supply that is being issued. Of course, it's going to have less of an effect. So whether or not there's a distinctive point where we can say, yep, this is the point where having stopped mattered. We're in the, I don't want to say it, but we're in the super cycle, or whether or not it is kind of still just like chopping around, but that chopping starts to be a little bit, more, let's say, regular, like it's not happening in that cadence with that 4-year cycle. I'm not sure, but boy, you hate to say like this time feels different, but sure does feel different.
Well, I would add to that too. I would not be surprised. And I think whether it's the halvings or I think another important thing to take into consideration, like having been in this for 12 years now, which is hard to believe. If you go back to like 2013, 2014 era, the way sort of these blow off tops would happen is you'd have some sort of news event that would send people to Bitcoin, the price would go up, they'd FOMO in, and then ultimately retail would get over their skis trading shitcoin. So the sort of path in was they would go buy Bitcoin, then they'd send their Bitcoin to Poloniex or Bittrex or Cryptsy, God forbid, rest in peace to all three of those. And then they trade shitcoins and lose that. And so a lot of like the last three major cycles in 2013, 2014, 2017, and even 21 to a certain extent, you buy Bitcoin, send it to exchange, and then trade shitcoins with it. And the dominant flow of capital of newcomers is coming through these other mechanisms, whether it be the ETFs or proxy exposure via public stocks. And there's literally no ability for somebody to buy an IBIT stock or buy MSTR and then send it to an exchange and convert that for shitcoin. So I think that's actually playing into it as well. And I think that a lot of the money going into these proxy Bitcoin exposure products, whether it's ETFs or stocks, is stickier, where people are just going to set it and forget it. And so not the way I would get exposure to Bitcoin, but to each their own. And many people are deciding that they want to get exposure via these products. I mean, the ETF launch IBIT's the most successful launch ever. It was the quickest, the $70 billion in market cap of any ETF ever launched. And so I think it's a very different dynamic in that way as well.
Interesting. Nico, how about yourself?
Yeah, it's an excellent story. We covered it this morning. I mean, the fact that Michael Saylor is going on Legacy Financial Media and he's basically saying, hey guys, it's a super cycle. The cycles are dead. It's the end of crypto winters. I've seen this pattern before. I'm going to take a little bit of a contrarian take. I think in 2017, the thing that people saw to like see the thing that people used to try to outperform Bitcoin was the ICOs. In 2021, it was kind of like the layer one altcoins. What I'm seeing this cycle is the Bitcoin treasury play, right? So I think, we're starting to see a bunch of copycats, of course, like the big three, Michael Saylor's strategy, Jack Mallers and SoftBank and Tether's 21. And then, of course, David Bailey's Nakamoto. I don't think those are going to go away. But the copycats, which are popping all over the world, I think they're going to start cutting corners. And they're going to take leverage and they're going to try to do whatever it takes to raise money and buy Bitcoin. And then I think eventually something's going to blow up and then we're going to have a crash. I mean, I've heard this so many times, right? This is the Bitcoin super cycle. The cycles are done. We're heading to $1 million. But I've just is a very, very familiar pattern. But you can tell like Saylor's emboldened. And rightly so. He was vindicated. He earned his stripes. I mean, he bought at the top at 2021. I remember seeing him at Pacific Bitcoin. His company was down billions of dollars, and he was just silent, just on the VIP section, sitting in the main, like watching all the panels, saying nothing. And then, of course, like all of us Bitcoiners go through, he had a vindication story, and his stock outperformed, and the guy looks like an absolute genius, and I think he is. So, yeah, I mean, I think this cycle's, maybe it's an unpopular take. I get a lot of heat when I say it, but I think this cycle's ICO, layer one, which was 2021, is these Bitcoin treasury companies. I think the more copycats pop up, I think the higher the probability they're going to cut corners, and then eventually someone's going to take too much leverage, and then a domino effect happens, and then bam, bing, bam, boom, we're in another bear market.
Can I take the contrarian point to that contrarian point?
So a contrarian to contrarian.
Yeah,
I got Opti soundboard. I got Opti soundboard with me.
Oh shit, it's a contrarian derivative. Dude, I've got a soundboard too. Don't make me use it. Sessions told me no, but I might have to. But no, what I wanted to say is,
motherfucking boy.
I'm not going to get through this. Am I? Okay,
with this.
I'll be very quick. I promise. My thought here is that I agree with you, Nico. Like it does, the Bitcoin treasury companies do feel like ICOs. They do feel like they're layer one shitcoin hype, right? They could feel, you could even say, oh, it feels like the, NFT bubble that also blew up around that same time. However, all of those things, ICOs, NFTs, layer one shitcoins, those all sucked potential value that would have gone into Bitcoin, and they sucked it away from Bitcoin. The difference here is that, yes, are some of these companies going to blow up? Absolutely. But the ones that blow up are probably going to have an insignificant amount of Bitcoin relative to the ones that stay solvent, like MicroStrategy. Additionally, all of the people who are pumping fiat into these, these proxy vehicles, they are not pumping that into shitcoins. They are pumping it ultimately into Bitcoin via a proxy. So I think the setup is fundamentally different there. I see the concern. I share it as well. Like, it's kind of wild how many of these Bitcoin treasury companies are popping up. But at the end of the day, if we believe that hyper-Bitcoinization is actually going to happen, which I do, isn't every company eventually going to be a Bitcoin treasury company? And so it just depends where we're at in that cycle. Are people going to blow up along the way? Yes. Because if you play fiat games, you win fiat prizes. But I think most of these larger Bitcoin treasury companies will stay solvent. And ultimately, I think that's good for Bitcoin still.
I think you nailed it with one specific point. Fiat games get fiat prizes. I think to piggyback on what Nico said, it's the fact that some of these companies, and probably at over enough time, a lot of these companies will continue the fiat games, and the ones that aren't actually plugged into that Bitcoiner ethos, that kind of understand the underlying of what's really going on, they're the ones that, living on a Bitcoin standard doesn't work if you are spending more than you earn. And that is exactly the problem with, you get a company that is not making any money and is just bleeding capital. And then they say, hey, we're on a Bitcoin standard now. We've got our Bitcoin treasury so that they can pump their stock. But when Bitcoin dumps and then their stock dumps and then they still are like swimming in debt, they're fucked. And so I think that's probably where we see the fallout. Also, the one thing that I never quite bought is when people said, well, institutions aren't buying this for the short term. Some of them, like, yeah, Saylor's going to go to his grave with all those coins. Those coins are never seeing the light of day. But the majority of other companies are made up of the exact same idiots that are like retail, that dumped every other cycle before and are subject to the exact same emotions. So I think it's kind of a mix of the two. I think the ones that get it stick around, but Nico, I'd agree. I don't think cycles are over. They just maybe look and are structured a little bit.
I think an important thing to take into consideration too is like how isolated is that public market proxy Bitcoin exposure treasury play this time around. Like when you look at the number of demand drivers, that is one. You have nation states like the U.S. government, obviously Bhutan, El Salvador, others talking about Bitcoin strategic reserves. You have the state of Texas. You have many other states throughout the United States thinking about this. And even if a lot of these publicly traded Bitcoin treasury companies, set my webcam, blow up, like, is my question is, I'm not saying it's going to go one way or the other. I'm very curious to see, like, is there enough external demand from this pure sort of speculative attack via public capital markets, vertical, isolated enough? Like, is there enough demand outside of that play to soak up any blowups that happen if a company's forced to sell their Bitcoin? Is there enough external demand from that strategy to just soak it up and make the correction caused by that sell-off suppressed?
Bitcoin Well is the best place to be buying and selling Bitcoin in Canada and the US. And now with Bitcoin Well Infinite, it's also the best place to be making large buys at their OTC desk of over $50,000. Their white glove service gives you fast transactions, no slippage, and the lowest fees. You can scan the QR code on the screen or simply head to bitcoinwell.com/BTC Sessions to sign up today. And you can share your own personalized referral link to earn commissions.